Welcome to Saving and Investing with Squirrel. Today I'm going to talk you through the most commonly asked questions that I hear from investors when I've been chatting with them on the phone. Let's get started with talking about who Squirrel is as a company. So we're a financial services organisation that aims to bring competition to the market. We do that through savings and investing products, lending products, and a really extensive mortgage advice service. We are licensed by the Financial Markets Authority for the products and services that we provide. We're audited by KPMG each year. And guess what? We've got physical locations in Auckland, Wellington, and Christchurch. Here's an overview of Squirrel's savings and investing products. Starting off with the Squirrel on-call account. Perfect place for your emergency funds or your day-to-day savings. Offer a great interest rate, which you'll be able to find on our website. The money in that account is stored with some of New Zealand's main banks. Okay, so not a huge amount of investment risk there. There are no transaction fees and no account fees. And when you want to withdraw money from that account, it'll be back in your bank account in around 2 hours, 7 days a week, between 9 AM and 11 PM. Next up is the Squirrel Monthly Income Fund, which is a managed fund. The fund invests in first mortgages secured over residential property. The fund aims to deliver a return that's 2 percentage points higher than a bank 1-year term investment rate over time. The fund works perfectly for those people that are looking for a hands-off approach to what they do day to day. It has strong capital protection in place and provides a monthly income stream for you. The fund is taxed under the PI tax system, which means it's tax effective for most investors. Last but not least, the fund has a 30-day notice period for withdrawals. So when you want to get your money out, you give us notice, and sometime within that 30 days, that money will come back to you. Moving on to Squirrel Term Investments now. Our term investments allow you to be a bit more active in your investment style. You can choose the level of investment risk that works for you. Our home loan and construction loan term investments are all secured by first mortgages over residential property. The term investments are taxed under the resident withholding tax system, and really important points about how you get your money back. So 2 things to consider here. Clearly, if your term investment matures, your principal is repaid, and any interest owing at that point will be returned to you. You also have the option of selling your investment during the term. Really important to note that there are no fees, charges, or penalties when you sell your investment. And when you sell, it's really easy. You just tick a box online. For how long it takes to sell, you can refer to our website and we show you information there about how long it's taking at present. So with the product overview out the way, let's talk about some things for you to think about for what might be right for your own personal circumstances. Things to think about. Number 1, how quickly can you get your money out? So that's different between the different products that we offer. What returns might be available for you and how are those returns constructed? What's the level of investment risk that you're willing to take with your money? It's also worth thinking about tax because that can make a difference for you as well. So how much money do you need to get started with saving and investing with Squirrel? We make it really easy for you. So with our on-call account, you can start with as little as $1 and you can set up an automatic payment, you can deposit whenever you like, really simple. With our Squirrel Monthly Income Fund and our term investments, you can do everything with $100. So who can join Squirrel? Well, if you've got a New Zealand driver's license or a New Zealand passport, you're over the age of 18 and we can connect you with a New Zealand residential address, you're in. You can sign up for yourself, you can sign up for a company, or you can sign up a trust. When I'm chatting with investors, most of them will ask me about the investment risk that they're taking and what are the chances that they're going to lose money. Let's start with the on-call account. Money held in that on-call account is held on trust for you. We place that money when you make a deposit with main banks here in New Zealand. Those main banks pay us interest and that generates the interest for you. So that's how the interest is generated. So when you start thinking about the investment risk, actually what you're really looking through to is the strength of our main banks, and they're in a really strong position. Now, what happens if you decide to invest in our managed funds or our term investments? Well, there are 3 layers of investment risk protection that we put in place for you. First of all, we assess a borrower against our credit policy just like a bank would, and we won't lend them any money until we've got that right. Number 2, we will lend at an appropriate loan to value ratio and will also take security. For example, with our home loan term investments, we lend to a maximum of 80% loan to value ratio, and we will take a first mortgage as security. The mortgage gives us lots of control should a borrower start to default. The third thing that we put in place, we have reserve funds. So those reserve funds are there to act as a shock absorber in the event that a borrower misses payments or defaults on their loan. While we don't guarantee the reserve funds, ultimately, to date, no investor has lost a cent investing with Squirrel. One of the focus points for Squirrel is delivering regular returns to you. So regardless of whether you are investing in our on-call account, our term investments, or our managed fund, the interest will come back to you on a monthly basis. From a tax perspective, if you are investing in our on-call account or our term investments, we'll deduct the resident withholding tax that you need to pay as you earn your returns. We automatically pay that off to IRD on your behalf, so it's all sorted out for you, just like a bank does. If you're investing in our managed funds, the PI tax system applies. In April each year, we'll deduct the PI tax that you need to pay from your managed funds balance and pay that off to IRD for you. So overall, remember that you'll earn your returns on a monthly basis, and we'll look after your tax obligations for you on the investments you have with Squirrel. Let's talk about the fees and charges you might experience when you save and invest with Squirrel. Our on-call account doesn't have any account fees or transaction fees, so you can deposit and withdraw as much as you like without attracting fees, and it won't impact your interest rate. Squirrel will deduct a small service margin from the gross interest that we earn from holding your money on trust with the banks. The bulk of the interest, though, is paid to you. You can find the on-call interest rate and our service margin on our website. For Squirrel's managed funds, we charge a funds management fee. The fee reflects the costs of running the underlying loans in our portfolio and the administration costs of running a managed fund. You can find the fees on our website and in the product disclosure statement. Really important to note though, the returns that we quote on our website are on an after fees basis. With our term investments, there are no fees or charges to make an investment. Squirrel does earn a service margin, which helps us cover our costs of running the portfolio. You can find that service margin on our website. And just like our managed funds, the returns that we quote on the website are after that service margin has already been deducted. If you decide to sell a term investment before it matures, the good news is there's no fees or charges or penalty interest applied. How good is that? So overall with Squirrel, you can find all of the fees and service margin information on our website. Our goal is to be really fair and transparent in all that we do. When you make a deposit to your on-call account, that money's placed with main banks here in New Zealand. That's pretty simple. If you decide to invest in our managed funds or term investments, then that money will be lent to New Zealand borrowers. The borrowers pay interest, and that's what generates the returns for you. Squirrel doesn't have a credit rating. We are, however, regulated by the FMA. We have an independent board in place, and we're audited by KPMG on both a financial and custodial basis each year. As far as the deposit compensation scheme goes, money you hold in the Squirrel on-call account will be covered. Money you decide to invest in our term investments or managed funds will not be covered by the deposit compensation scheme. However, you do have the benefit offered by Squirrel's reserve funds. If you meet the FMA's wholesale investor guidelines, best thing to do is head to our website on the Save and Invest menu, go to the wholesale investing page and book a time to chat with us. If you'd like to get in touch, you can give us a call on 0800 21 22 30 or email us on money@squirrel.co.nz. We're available Monday to Friday, 8:30 to 5 p.m, and we run a limited service on the weekends. You also have the option of booking a time for us to call you via the Save and Invest page on our website. If you're keen to join us, you can register via the Squirrel website or you can download the Squirrel mobile app. It takes about 5 minutes to register and you'll need either your New Zealand driver's license or your New Zealand passport handy when you do that. Once you've registered, you'll receive an email from us which explains how to make your first deposit and really get started. Thanks for watching this overview of Squirrel's saving and investing options. If you want to find out more, head to our website squirrel.co.nz. Thanks!